Alright, thanks for staying with us as we walk into trade this morning. It's all about crude once again, and we've been looking at this wonderful comparison as to last time when crude prices were at $80, what was the world looking like? And the world was very different. Currency was not at 67, currency was at 62. The dollar index was not at 90, the dollar index was almost at 80. So even though crude may have gone back to levels of 80, the world is looking very different both in terms of levels for stock markets, the forex reserves which India currently has, the movement in the dollar index, and more importantly inflation. The difference is that last time when crude prices were at these levels, crude prices they came in a structural decline. Currently there seems to be a cyclical or a structural uptick in crude. So we'll get that comparison going, a now and then comparison. Last time when crude prices were at $80, what were the major indicators in the world, what were they looking like, and what right now they are looking like. Sandeep Sabharwal, I have no idea how to react to this spike in crude. Nobody has any idea, let me put it this way. I mean, there has to be some justification why crude has gone up by 30% this year.
Yeah, so I think the only justification is that the supplies are being curtailed much more than what is being declared by OPEC, and then there is the fear factor which is playing out. So I think what we need to see is that whether there is any case we can build up that crude will suddenly start declining significantly, and that also seems unlikely. So I think that could be some concern for the near term, and this combined with the fact that because normally if you see when the US dollar rallies, commodities generally correct. So we are seeing that correction coming through in some base metals, etc. They are not rising any longer, but then crude is in its own dynamic, and so I think a lot of correlations are broken down in the near term, but long term those correlations will remain. Like Indian markets continue to rally even as the rupee was falling drastically, which normally never happens. Like normally there is a very high correlation between rupee movement and the market movement. So I think these correlations are broken in the short run, but they are very long term 10-20 year correlations, so which we cannot discard at this stage. So my guess is that we could see the markets give up some more gains before we should actually look at buying in any meaningful manner.
Okay, where does it leave the story back home? You know, yesterday we had the HPCL management, and they said, look, there's complete freedom to pass on the burden if need be. But then, you know, a little bit of a caveat was added that, you know, it's a price sensitive product, and so we have to balance, you know, what this does for the budget of the end consumer as well. In between the lines, he said that we're going to play the balancing act. Does that convince the market to take a fresh call on OMCs, or is it an avoid?
What the CEOs of these oil companies are saying is so weird. Like last week, IOC chairman said that crude rise is not fundamental. That's why we are not passing on prices. But now it's a weird statement. Like you are just supposed to pass on the price. Just translate, add refining margin, and pass on. You are not supposed to do anything else. So I think taking a call on where that commodity will be tomorrow, and based on that you are pricing today, that's something very new, and I don't see any logic for that. So obviously there is freedom, but that where that freedom is going, we are not very sure. So I think that remains the risk for these stocks, obviously.
Okay, couple of more stocks which are worth discussing, and the big mover yesterday, yes, it was Bajaj Finance. You know it, I know it, but I don't want to discuss Bajaj Finance once again. We want to discuss Jyothi Labs. Jyothi Labs appreciated by about 20% plus. Now Jyothi Labs is not it is an FMCG company, but it is like a monoline FMCG company, because they are largely present only in 2 or 3 large categories, and bulk of the business essentially comes from HPC category, which also is centered around washing detergents, soaps, largely centered around in that space. The numbers which came out with Jyothi Labs again are in clear indication that the bottom of the pyramid brands, and that's how Jyothi got constructed. They came up with disruptive pricing a couple of years ago. They are now gaining traction. The stock may be trading at about 32 times 1 year forward. That, considering the benchmark what we have from others, is not very expensive. But the stock yesterday went up on volumes which were way higher than the 10-day average. Sandeep, it's a typical bottom of the pyramid bet. if you are bullish on rural economy and if you want to bet on monolined FMCG companies, Jyothi Labs clearly fits the bill. I mean, they were the disruptive guys. I think they own this brand Ghadi, if my memory serves me right. Oh, Ujala, sorry, they own Ujala. They own Ujala. Ghadi is the market. Yeah.
I think so. They have got some, and in the anti-mosquito, they are also.
It's a bottom of pyramid FMCG company. Let me
I think
put
it's
it
a very
this way.
good company. Somehow it's not got its due in the past, because it's got very strong brands and they have continued to do well over a period of time, even through the downturn. So. But then a 20% move in such a stock is slightly strange, because normally it's a very low beta stock, so it doesn't move that way. And to that extent, a large part of whatever positivity was there could have got factored in yesterday only, and the absolute gain potential from here in the near term has come down. But overall, it's a very good company. Valuations are after yesterday's move very near to many of the large cap, large size FMCG companies, and to that extent I think upside is limited now.
Okay, that's a quick word coming in on Jyothi Labs. Need to also address some more numbers that came in. I want to touch upon, okay, we'll go to Bajaj Finance in just a bit, but I want to touch upon very quickly Taro's earnings, which are good, Sandeep. Do you think that's a facelift for domestic pharma? I mean, it directly impacts Sun Pharma, but with Warren Buffett's endorsement of the generic pharma space, with, by increasing his holdings in Teva, do you feel that the sector as a whole will get its due fillip?
Yeah, I think so, because now after almost 3 years, my view is that if there is one sector which is now in value zone in the entire Indian market, it's pharma. So, and especially large cap pharma, because small cap pharma is very tough to understand. Some of these companies have continued to show strong number when the rest of the market has not done well, which is also difficult to understand. So, I don't rely on their number too much, but I think stocks like Reddy's or Lupin or all these, there is no near term visibility. So, it's not that, so momentum buyers are not going to come in there, but then you need to accumulate these stocks and then hold on. And then over the next 2 years, I'm sure decent money will be made.
Sandeep, one question before I go to technical picks. Now, a lot of audience or speakers on our channel are talking about let's take exposure in companies, pharma companies, which doesn't have much of exposure in US and more on the domestic front. How are you viewing now when you're talking about value zone? Are you talking value zone about companies which have exposure towards US, or you're talking about sector at large?
No, I think you have to have a significant exposure to the export markets, because domestic markets are not so profitable, and even companies which are operating here domestically, their valuations have not come off so much. So, I don't see a big story there, and domestic market can only grow so much. So, we need to buy companies which were very fancied, which have come down now. They are no longer fancied, they trade at maybe 20-30% of their peak price. And eventually, that's how you buy into high quality large cap companies. When they come to such values, then they will obviously have a strategy and they'll eventually turn around. And the rupee fall will have a positive impact on next year's profitability of pharma companies, which are on the export side.
Well, there are some export oriented pharma companies and large cap companies, mind you, some of them finding their names in index which have corrected 50 to 55% from their peak. And Sandeep Sagarwal feels that they are now into value zone.